But I still actually think the economy is going to be delivering moderate growth this year, even with that fiscal drag. Because there's a lot of reasons to actually be optimistic that the national economy is actually getting better. And I want to highlight a few key factors that are likely to help propel economic growth. The first one is that we are finally seeing a stabilization in the housing market. And this is unambiguously positive. If you look back at other business cycles, traditionally real estate is the first sector into the recession. It's also usually the first sector out of the recession. This time it was the first one in, but the last out. And the stabilization in the housing market has very powerful positive implications. It creates a virtuous circle. When the housing market's doing better, you get more home construction. And housing starts have gone from a low of about 470,000 units up to, by the end of last year, up to about 900,000 units. So in other words, the pace of home construction has doubled from its low. Now that's still actually weak. You know, on the basis of population growth, demographics, household formation, a healthy number is probably about 1.5 to 1.6 million units. So 900,000 is still weak. But keep in mind the direction, right? A doubling of home construction is very additive to economic growth, and there's more upside to go. The fact that home prices are now starting to rise means household wealth is going to improve. When home prices are rising, it improves consumer confidence. A stronger real estate market means people go out and actually buy housing-related items, big-ticket items. And in fact, when you look at consumer spending, close to a quarter of all consumer sales are on housing-related items. So you should not underestimate the powerful positive effects that the fact that the housing market is finally showing some signs of stabilization could have. Second point that's likely to contribute to economic growth is the fact that we are seeing credit conditions improve. Credit is starting to flow again. And consumer borrowing has increased, business borrowing has increased, and this actually increases the scope for monetary policy to be more effective in terms of driving growth. You know, I teach monetary policy at a couple of universities, and I often get questions by students like, how can you have the Fed funds rate at 0 and not have booming economic growth? And the point I always have to make to the students is the interest rate doesn't matter if no one is willing to give you a loan or if no one wants one, right? The interest rate is the price of credit, but if the supply and the demand for credit isn't there, it doesn't matter. Well, the fact that consumer credit is rising tells us that the consumer deleveraging that's been taking place that's hampered economic growth the last several years is finally diminishing. And so what we can see is that low interest rates could actually start to have a bigger effect. Business borrowing is the same story. Business credit is starting to flow again. Small business lending requirements have been loosened, and this is extraordinarily positive. So on the monetary policy front, the Federal Reserve is doing absolutely everything it can to promote economic growth. You know, it took interest rates all the way down to 0. Now they ran into a bit of a problem because their models said that they should cut interest rates by another 2 to 3 percentage points. And they haven't quite figured out how to sell 3-month T-bills with a yield of -2. Right? So they had to do something else, and what they came up with was quantitative easing, going out and buying bonds and injecting money directly into the economy. And what they've said is they're going to continue to do this until such time as they actually see job creation running at a much higher rate. In other words, they're not focused as much on inflation anymore. They're now focused on the dual mandate of also working towards full employment. And what we are likely to see over the course of this year is, I think, we're going to see the Fed continuing to buy bonds throughout the next 12 months. I think we're going to continue to see monetary stimulus being injected into the economy. And as I said, there's scope that it could start to have a bigger impact. Another point that's out there in favor of the economy is business investment. Businesses are sitting on absolutely tons of cash. Their balance sheets are extraordinarily strong. If they even put a small fraction of the money that they have on their balance sheets to work, boy, it could create a lot of economic growth and jobs. The problem is confidence. And in the environment that we've been in for the last several years, businesses have been reluctant to put their balance sheets to work. They've been reluctant to make big bets. And that's probably one of the biggest sources of frustration over the fact that fiscal policy remains uncertain, because I do think it's acting as a headwind on business confidence. But businesses are also worried about the European financial crisis. They're worried about the slowdown in emerging markets. They're worried about, Iran and its nuclear program and whether that could create an oil shock. There's a lot of risks out there. My message is to businesses is you cannot wait for the risks to clear before you invest. When I do a presentation like this back at home, and I wake up in the morning and it is pea soup fog outside, I still make the trip, right? I don't have a choice, right? If I have 300 people waiting for me to do a presentation, I can't wait for the fog to clear. I might change the route I take, I might change the speed at which I drive, but I still make the trip. And that's the analogy for the environment that we've been in. Businesses cannot wait for the risks to clear before they start building their business. Now, it's very hard to tell what will exactly happen with business confidence, but I think if we get past the debt ceiling, if we see continued sort of muddling along in Europe, but economic conditions starting to show signs of stabilization, if we see a stronger China, I think these are the elements that can lead to stronger business confidence and stronger business investment this year. I also think that manufacturing is having a renaissance. The trend towards outsourcing is reversing. You can see it in the data that the industries that were doing the bulk of the outsourcing, the pace has diminished, and in fact, we're actually starting to see some onshoring. And the access to shale oil and gas is fundamentally changing the energy sector for the United States in a very positive way, creating a lot of potential. So if you think about it, there is an awful lot of economic positives out there, and there's a lot of reasons to believe that the legacies of the financial crisis that have really held back the economy for such a long time are starting to abate, and the housing market is probably the best single indicator of that.